All right, thanks, Kinga. Hi, everyone. So for those of you who I haven't spoken with before, my name is Andrea Morgan. I am the head of support and training here at Payment Evolution, and I am the person that knows every tip and trick in the system. And so I wanted to talk about vacation because this is the time of year. I don't know if you've noticed this, but the streets are a lot quieter. I know it usually takes me about 25 minutes to get to work, and now I get here in about 15 because there's no traffic because everyone's on vacation. And that's awesome. We all love going on vacation. Thank you to those of you who put your favorite vacation spots in in the questions box because I love going on vacation. I'm always looking for a good one too. And so I wanted to talk to you today. I wanted to teach you a couple of things. First of all, I want you to understand how vacation works within Payment Evolution, how you're going to pay it out for your employees and track it and things like that. But also I wanted to give you some tips and tricks because I am on my way to being a payroll specialist. I've been doing this for a long time, and there are some rules with regards to vacation that you might not know about. And I want to point you in the right direction so that you do know, because I certainly want you to be giving the proper things to your employees so that everybody's happy and everybody's, entitled to, it gets what they're entitled to, and you get what you're entitled to as an employer as well. So here we go. Let's get started. If any questions come up along the way, please do put them in the questions box. Kinga will answer some as they come in, either written. Sometimes she'll have me pause if it's one that we need to answer kind of right when we're in the thick of it. And other questions might be held until the end. So just please do put them in. We will answer all the questions, and have fun. Enjoy. Ask me anything. Let's go. Let's talk about employee vacation. Okay, so the first thing I want you to understand with regards to vacation is vacation dollars and vacation time are not the same thing. Okay, labor standards in every province require that you pay both dollars and give time. So we're going to get to labor standards a little bit later, but what is really important to understand is that both things are given to the employee, and it's going to depend on their length of service with you and what province you're in, how much. But the standard, the lowest amount is 4% in dollars and 2 weeks in time. It is your responsibility as the employer to ensure that the employee takes the time. Payment Evolution does not track the time. We do track the dollars for you, though, and you can create a vacation bank within our system to calculate and track the dollars. So if you're calculating time, great, and make sure your employees take it. It is your responsibility to make sure that the employees take the time that you are giving them for that they get their 2 weeks vacation, and also that you pay them their vacation dollars. Now, something I'm going to talk about that I want to point out is a lot of what we're talking about today is going to refer to time-based employees. Okay, at the end, we're going to talk about what do you do with salaried employees, because a lot of times a salaried employee has a different scenario. So we're going to talk about that at the end. I didn't put that in the slides. Kinga, can you remind me to talk about salaried employees at the end? Awesome. Just in case I forget. Okay, so we know that we are going to track vacation dollars within Payment Evolution. So the question becomes, do we accrue it or do we release it? So what does that mean? Well, in very simple terms, accrue means that we bank the dollars for you or for the employee. The funds remain in the employer bank account, and they are held until they are released. And when they are released, they are taxed at that time. Some employers really want to do this. Some employees really want this. And the reason you would want this is especially for those time-based employees, if they earn their vacation dollars and then they go away on vacation, this would be the time that you would pay them out. So that would be a week or a couple days or whatever the length of time that they go on vacation is, that they're still getting paid. Because if they've banked $500 and they go away on vacation, they get paid that $500. So it can really help them keep their cash flow consistent even when they go on vacation. The second option is to release it. And by release it, we mean release it each pay. Some employers and some employees prefer this, that as you pay your employees, you release that percentage of vacation with each pay. So as a very simple example, if I have an employee set to 4% release, I paid them $100, their gross pay would be $104 because I'm giving them $4 in vacation pay on top of their regular pay. They are taxed at the time when it is paid. All employees, regardless of whether you accrue it or release it, it is taxed at the time that it is paid out. So if an employee has a question about their taxes, by all means, have a look at that. Are they being paid vacation, and therefore are they being taxed at the time that it is paid out? So this is all well and good, but how do we set it up? Well, here we go. So I'm logged into one of my accounts, and we have just a regular account here. So the first thing I'm going to do is I'm going to have a quick look at my pay rules, okay? Because with PaymentEvolution, you can set up any vacation amount that you want. The program does have the standards that are dictated in the labor standards across Canada for vacation. So I went to company settings, pay rules, and then I clicked on the vacation tab. So the standards across Canada are 4%, 6%, and 8%. And then there's an accrue or a release each pay option for each of those items. For your reference, 4% is equal to 2 weeks, 6% is equal to 3 weeks, and 8% is equal to 4 weeks. I have also added several other rules in here and set them how I want. So I have added a 5% release each pay, a 9.6% for construction to accrue, and I've added a 9.6% release each pay. What you need to know is that you can add any rule that you want. So maybe you give 5 weeks instead of 4 weeks, and you need to add a 10%. So you would do that by just clicking the add button. You would say, with a rule name, we're going to say 10%, and we're going to accrue it. And then we would set the percentage at 10. And down here, we'd select accrue or release each pay. Because we're going to do accrue, we're just going to leave it there and click Save Rule. Now, once you've added the rule can be applied to any employee. So this is how rules work in our system anyway, is that you create the rule for the company and then you apply them to employees. So I'm going to go ahead and go over to the employees and show you how we work with the rules now. So on my payroll details and rules tab for each employee, I have 2 fields that I'll point out here. We have vacation pay owing and automatic vacation. Automatic vacation, I'm going to start here, is where we set up that rule. What we want to happen with this employee. So what we want to happen with this employee, he's set to 4% release each pay. I can change him to any of the other ones, or I can leave him. I'm sorry, he's set to 4% accrue, not release each pay. And here we have his vacation pay owing. This is the amount that has been banked in the system. If you're new to PaymentEvolution, you're coming from another program, you've got an amount that you've banked for the employee to date, you can add it here when you're setting up the employee. Note that when you go to pay it out, you're going to get a couple of options, but very important, if you put an amount in vacation pay owing and you set the employee to release each pay instead of accrue, the first time you run payroll, it will release what they've earned in that first payroll and everything here. it will release everything because you've set it to release everything. So do make sure that if you're putting a balance in here and you don't want it to release, make sure you're setting it to accrue. This is very important. So once you do that, you just click Save, and the employee is set to go. You can review any employee's information by going to the payroll details and rules page and seeing what they owe. Or sorry, what you owe them for vacation. And again, you can set any one of them. This guy's got $6 million in vacation. King and I were laughing. I said I should pay him today. He's probably going to take off. He's not going to be my employee anymore.
There's actually a good question.
Yeah.
What happens if you leave it off by accident?
If you leave it, that's a great question. I did want to get to that. We forgot to put that in the slides. So I'm glad you asked. Thank you for whoever asked. If you leave it off by accident, it's not calculating. And so what you need to do is you need to add it in. We do have people who discover that they didn't calculate vacation up until this point, and so now they need to calculate it. So here's what you're going to do. You've discovered that your employee has 0 pay owing, it's been off, and you haven't calculated it for the whole year. I would go to the financial year to date, and I would look at their earnings. I would add up any earnings that are subject to vacation. Okay. If you're not sure what earnings are subject to vacation, you can do a quick Google of vacationable earnings. Find your province, and it will show you a list of vacationable earnings. Please note that in many provinces, vacation is subject to vacation. This is one of the biggest questions we get in support because people don't believe that this is even possible, and we think it's very crazy too, but it's real. Vacation is subject to vacation, and if that is the case, your account is set to have vacation calculate on vacation based on the province of employment for the employee. So we do set this. We don't enforce labor standards for most of these items, and I'll tell you why a little bit later. But for this one, we do. Vacation is subject to vacation in many provinces. So if you're not sure, check your labor standards for your province and confirm. But we have set it in the system to be accurate based on your province and your employee's province of employment. So let's go back to what do we do for we didn't calculate we left it off. I would take all the vacationable earnings and I would add them up. I would get 4% of that and go put that amount in the vacation pay owing. It is your choice at that point if you want to set them to accrue or just pay it all out right now. But do set them up. A few provinces have a waiting period for how long the employee has to work before they start getting vacation, but it's not long. I think the longest is 3 months. I think one of them has a 5-day waiting period. Do check your rules because you want vacation to calculate properly for your employees. So once we have it all set up, and if we need to go back and set it up for an employee we've done that, we click Save. Once we've clicked Save on adding it, it will also show up in our year to date under the vacation balance. You can't add it here. You have to add it in the payroll details and rules page. But once you save it, it will show up here on the employee's year to date for vacation balance. So let's go back to my slides. So now we have set up vacation. We know how to do it. Now we're going to pay it out. So I'm going to go ahead and run a payroll, and I'm going to pay out a couple of vacations. I'm going to close my remittance period. I like reports. Okay, so I'm going to enter my dates just like I would for a regular payroll and click submit. Now on my salaries page, I'm going to talk about salaries right now. So I had mentioned before that most of the time when we're banking vacation, it is vacation dollars that we bank in the system, not time. And so salaried employees are in a bit of an unusual situation because for the most part, salaried employees make the same amount every time. They make an amount per year, and it is inclusive of their vacation time. So let's say you have a salaried employee that makes $50,000 a year, and that is inclusive of 2 weeks vacation. Well, what you're giving them is 2 weeks vacation time, not vacation dollars, because the $50,000 includes their vacation dollars. So often what most companies do in a situation like this with an employee is it's part of their employment contract to call it simply vacation, that vacation is inclusive in the contract, and they pay their regular hours for the time that they are on vacation, and then they track the time separately. So what happens at that point is it's fine, the employee makes the same amount every time, but what happens if the employee is terminated? What happens if they're terminated on August 1st and between January 1st and June 30th, they took 1 week vacation? But since June 30th, they haven't taken any. So for the whole month of July, they technically should have gotten 4% vacation worth of time, but they didn't take it and then they were terminated. So at that point, you would calculate how much time they're owed in vacation based on their hours, and you would enter that in on their final pay as a separate payout for that amount, because then you would do dollars times rate at that point. So if you need help with that, let us know. Some people do set it up that they, make their salary 4% less. So they would say their salary amount is $48,000 and inclusive of and then add the 4 weeks, the 4% on top of that. So it's just a matter of how you want it to set it up. And the employees will see it each time. So what you would do if you wanted to do it in that scenario is you would put the employee's pay in at $48,000. 4% of that would be $2,000, and say release each pay. So it's included every time as part of their regular pay every time, and then they get it every time they go on vacation. Every time they run payroll and when they go on vacation, they would get the full payout each time. So 2 different ways to set up salaried employees. It's just a matter of what works best for you and how your employees want to see it. The difference here is the employee that has it set up with $48,000, it says that on their pay slip that their pay rate is $48,000 rather than $50,000. So we don't want that to be an issue for anybody. So there's 2 ways to do it, and either one you have to decide which works best for you and your employees. So I'm going to skip the salaried employees for right now. Oh, actually, I have this guy set up for vacation. So vacation can be paid out in a couple of different ways. So vacation can be paid out in addition to a regular payroll. So I'm going to say this employee, because we were looking at him earlier, he had 37.5 regular hours. I'm going to check the checkbox and approve. We always approve regular hours before we add any additional earnings. And then I'm going to click the plus sign to add the additional earning, and I'm going to select release vacation owing. This release vacation owing is only available to employees who are set up to accrue vacation. Otherwise, the earnings code will say vacation. So it depends on how the employee is set up. So here's what it's going to tell me. It's going to tell me what the total earnings are. That means the total amount that's in their vacation bank. Now, I can pay all of it, some of it, more than it, or all of it including current earnings. I'm going to do all of it including current earnings because I want you to see what happens. This is often a source of confusion. When I check the checkbox to release all including current earnings, you would do this for an employee that wants to be fully paid out and somebody who is being terminated for sure. You always want to say release all vacation pay, including current earnings, because that means anything that they earned on this pay run, we want to release that as well. We click the add button and it comes in at 0. This is correct. Okay, you're going to let it come in at 0. You're going to click submit and it's going to come in as at 0. The reason is it cannot calculate the amount that is owed on the current pay run until we get through the calculate step of the current pay run. It has to calculate what's earned on the vacation, on the regular hours, any other earnings and benefits that are subject to vacation. All of those things need to be calculated, which happens when we click the calculate button. So we can't know what this amount is on what we're releasing until we get through that step, and we'll review.
If someone takes a full 2 weeks vacation, let's say in the second month, and there's not enough vacation accrued in the system, can you still pay it out and the system will give it a negative?
Absolutely. So I was going to do that next. Thanks for the question. So that's what I was saying, when you can pay out more than it, and we'll go on to the timesheets page and we'll pay another employee. So I like the bulk button. So let's say an employee doesn't work at all and just takes vacation. Okay, he's got $8,000 banked. I just changed his earnings code to release vacation owing. He's got that amount banked. I'm actually going to do this a different way, because if we go in, it tells me his basics. He's got $8,800 banked. I'm going to pay him $10,000. I'm going to click add and submit. What's going to happen is he's going to end up with a negative in his vacation balance, and that vacation amount owing it will be a negative, and each time you run payroll going forward, that number will slowly increase back to 0 until he's back in the positive realm again. Please note that if you do this and the employee is terminated, we cannot force you to take, the system will not force you to take the funds back from the employee. A lot of times this is an agreement between the employee and the employer that if they are terminated, then you can take it off their last pay. I highly recommend that if you do this, if you pay somebody ahead of time for vacation that they have not earned, please do get something in writing, signed from the employee, that states that if there is a separation between themselves and you, that you can deduct the amount from their last pay. Because otherwise, there is no guarantee that you can, and they might have a case against you with labor standards. So please do get everything in writing that you have agreed to this, and you'll go from there. So this employee we're going to release, and we're going to see it all. Another option is just to release some of it. And this is my guy who has the $6 million. I just want to know his standard rate. Okay. So here's something that's really interesting. If your employee goes on vacation and you are paying them for that vacation from their vacation bank, the hours for vacation are insurable. So what you need to do in the system, and this is a little bit tricky, what you need to do in the system is you're going to enter your hours, and then you're going to enter the total. So I know that my basic rate here is $50 an hour. So he took 10 hours of vacation, which means 500 hours. The hours are now insurable. If the employee takes vacation time, meaning you're not just paying them out, they actually took the day off or the 2 days or however much time it was, if they actually took the time off, those hours are insurable. Okay, so you're going to put in the hours and the earnings. If you have a combination, you can do multiple release vacation owings. It will add to the insurable hours just for the ones that you enter. So I'm going to click add and then submit. I didn't approve this one, so it won't go through. So only these guys are going to go through. Now, let's say I have an employee who is not set up for vacation at all. So this employee is not set to bank vacation. She has the earnings code of vacation. And again, if I wanted to, I would do this as an additional earning on top of something else. And I could simply pay her hours times rate. And approve that. And it'll come in on her payslip as vacation. Any questions before I move on, Kinga? Okay, awesome. So I'm going to click calculate. And this is when the program is doing it's really hard work. It's checking everything it needs to check. Okay, so let's have a quick look. Our salaried employee here, we told it to release all, including the current run. Remember there was $1,800 banked? We earned $37.50. And look, we're being paid $1,837.50. So it's doing exactly what we have told it to do. The other employees are being paid out as we told them to. We've got the hours in here under other hours worked. Those are our vacation hours. This employee is set up in Ontario. Vacation is not earned on vacation, so we don't have to worry about that. A few of the other provinces, that will be a different story. Other employees, if we want to review them, we can. Let's look at Dave. And here he's being paid out his $10,000 in vacation. Okay. Once we're ready, we're going to finalize the pay run. And I always recommend that you do this as part of a normal pay run. Any of these things should be paid out as part of your regular pay run where possible. I have a PIN for this account, so I'm going to go ahead and enter that and click Finish this pay run. I'm not going to send notifications because it's Kinga's and my email on there, and we don't need these emails. So I got the pie chart. Now I see that I'm done. Let's go have a quick look at what happened. I'm going to go to the employee, I think it was Dave Smith, that I paid out the overage amount on. And you see he's got a negative amount now in his bank. So if the next time I run payroll, if he earns, $100, it'll say negative $1,034.72. And so it will just keep gradually creeping back up towards a positive amount. And once it's a positive amount, it'll just keep going until you pay it out again. And so it's at your discretion if you would like to pay over what the employee has earned. But I do recommend that you get the okay ahead of time. So what's next on our slides? Oh, labor standards. So labor standards, I really did want to talk about labor standards because it's really important. So every province has its own rules with regards to vacation. So as mentioned, there is 4%, 6%, and 8% preset into the system. Those are the rules throughout Canada. Those are the standards throughout Canada. And it depends on the amount of time that the employee has worked for you that these are enforced. I know something has recently changed in Ontario, that it used to be that Ontario was set at 4% regardless of how long the employee had been there. Starting in January of 2018, they are enforcing 5 years requires at least 6% now. So great for employees, tough on employers, but this is real. You do want to keep up to date on labor standards because as things change, they can affect your payroll, and new minimum wages are coming in as well. So always be on top of that. I want to stress that the program does not enforce these labor standards. The only time we enforce a labor standard is with the vacation on vacation rule, because we noticed a lot of people were getting it wrong. We do not enforce the labor standards for a very specific reason. So we do ask what the employee's date of hire, and we can say, yes, they've worked for you for 5 years, but here's the big but. If you have a contract with an employee that is higher than the labor standards, when we do an update, they could potentially be pushed back to a lower rate. And this is why we do not do this. So we let you set it by employee as needed, but please do check your labor standards. It's really important that you set the right amount. It's really simple to change. And so please do check those things. Vacation payout before termination. So we just saw how to pay vacation out. And as I mentioned, when we pay vacation out before termination, we're going to want to use that release all, including current pay. If we release all, including current pay, they will have nothing owing. And if we go to terminate somebody who has vacation owing, the system will warn us. So let's say we go to run a payroll. Oops, sorry. I don't want to run a payroll. I want to terminate an employee. If I go to terminate an employee, it will tell me the employee has a vacation balance. Okay? It's a little red exclamation point. Please take note. There is something wrong. You should not have a vacation balance. If I go to the employee that has the negative vacation balance, it will tell me he's got the negative vacation balance. You should deal with this first. Please make sure you take note of these warnings. If you have selected release all, including current pay, then when we go to terminate the employee, we will not get that notification. Okay? Here's the thing. The system has no way of knowing that you're running a payroll and paying somebody out because you're about to terminate them. So there is a block on the ROE that asks for vacation pay on termination. I'm going to grab an ROE and show it to you. So what you would do after you run that last payroll and you paid the employee the amount that you owed them, including vacation, what you would do is you would add the vacation amount. So the vacation will end up here, $1,500, and let's say $750 of that was vacation. You would simply add that amount in there. So you would say you added the vacation pay in block 17 and the pay type, and that's it. You need to add these things in here because the system cannot know that that you've paid them out because you're about to terminate them. We are working on a whole new termination process that's going to allow for these things, but for now, this is how you do it within the program. Do you make sure you pay your employees everything or recoup any amounts that you might have overpaid? That's it. That's all I got. King, are there any questions?
How do we do the deduction of the last pay to cover vacation owing?
I'm not sure I understand the question. So you would just how do you
by the employee?
Oh, if the employee owed you an amount? Is that the question? If the employee owed an amount to the employer? Sure. So we can run a payroll. So we would do it on their last pay. And what I would do would just do a negative amount. So let's say we pay regular hours. Actually, sorry, it was this employee. Let's use him. So we're going to go back to the same employee that we were working with before so we can see what's going on. So we're going to approve regular hours. let's see if we can add in a negative vacation pay. So I'm going to put in the amount. I did release vacation owing as it is, and I'm going to submit it. I'm going to submit it as a negative amount, and his gross pay is now $788. I'm just going to remove this one so we can just focus on this guy. So the same way we paid it out before, and sorry, we're going to release all, including the current run, because I want the whole thing to come in. So we're going to go ahead and calculate it. Okay, so he earned $115, but we paid out, and it was a negative 113, I think, so, or 130 something. So what it's done is it's put in the negative amount, but it's balanced it out with the positive amount. So that way nothing is owing. So same way you would pay it with a positive amount, you can pay it with a negative amount, but you must have an amount. You cannot pay an employee a negative amount, meaning you can't take money back using the system. But this will balance out the vacation balance account. Let's go ahead and finish it so you can see that and see that he owes nothing, and you won't get that warning anymore. And so when we go back to the employee and we check the payroll details and rules, the vacation pay owing is 0. And in their year to date, again, vacation balance is 0, but they have received this amount in vacation. That was the amount from the previous amount that they had banked plus the one that they had just banked, but it took back the amount owing. Next question.